Hello and welcome to the paid weekly recap for the week ending January 2nd, 2026. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the paid system. Before we get started, normal disclosures. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. I also urge you to read the characteristics and risks of standardized options available at the link highlighted here. If you need a few more moments with the disclosures, please go ahead and pause the video here. Otherwise, we will get into the recap for this past week. So for the week, the 10-year yield continued to stay range bound, using 4.1 as support recently, with 4.2 being resistance. We haven't broken out of that range, although on Friday we started testing it again. New year, new themes. It appears that the 10-year yield is looking to press to a higher level, and that may start to impact sector rotation and stock rotation within the market. Now, speaking of rotation, we had the S&P 500 drifting lower to end the year. Maybe some last minute tax loss selling, etc., some allocations shift out of the broad market. Ultimately, on Friday, we did have a slightly higher day, started near highs, ended up in the middle of the range, above the Wednesday lows and the Wednesday close. So overall, slightly bullish, but nothing major in terms of the broad market allocation. Within the market, there was a lot of rotation, though. A lot of individual names way down, some way up. Big shifts going on, and we could see that as we look in towards the tech side of things. On Friday, after that same drift down, we started up higher. Looked like we were ready to have a big risk-on allocation on Friday morning. But by the time the first hour or two got through the day, we started seeing tech getting a lot weaker. AI names falling, some semiconductor names rising, and just a general big money flow shift as there was rotation and new names that were being bought and sold throughout the day on Friday. Tech ended up making an outside day, a higher high than the previous day and a lower low, closing below Wednesday's low. So generally a little bit of a bearish tone within the tech side of things. Small caps, on the other hand, opened inside the previous day's range, slightly higher than the Wednesday close, bounced off that 50-day moving average and closed above the previous day's high. So the most bullishness seemed to come from small caps. The most bearishness ended up with tech. Neutrality for the broad market. If we go down into the fine points of individual names, you could see very big stock movements, and one of those was actually one of our paid trade ideas for this week. The VIX continues to fall back down now after a climb into the end of the year. We should start to see some of that come off if the market's going to go to new highs, setting up for some potential for long call type trading if the market is going to remain or assume a bullish stance. But as I mentioned with the paid system, we had one trade idea this week, and that was in Palantir. Now, Palantir had a similar pullback for the first few days of the week. Looked to be generating some support initially at the 50-day moving average, then maybe at that 100-day moving average. And ultimately on Friday, it started opening strong, looking good, just like tech did. But tech and Palantir in particular got very weak throughout the day. And Palantir continued to drift lower, grind lower throughout the day on Friday after an initially bullish look to start the day. This pushed well down for the week. Very poor performance for Palantir. Just wasn't a tech name that the market was ready to reallocate to with the new year. So we can see some of that money flow, new year allocations, shifting market focus. Palantir doesn't seem to be in focus right now for the bulls. So for next week, I don't expect that to be on our list. We'll see new names coming up next week, but this week, Palantir, a very weak performer. In the time from Tuesday's open till the close on Friday, the stock was down 9%. Because of our put credit spread, and I'm sorry I have the wrong strikes here, we had the January 2nd 180, 177.5 put credit spread. That was initially out of the money. It ended up well fully in the money. Full loss here. So a $2.50 wide strike entered initially for about a potential 28% return on risk. Ended up being the 100% loss. And this will happen occasionally when we see these big rotations. Now, we will be looking for new names this week. We do have non-farm payrolls on Friday, so we have to be aware of that. Then the following week, we start getting into earnings. As a reminder, we'll discuss all of this and more during our live trading room. So please feel free to join us, 8:15 to 9:15 in the morning, Central Time. from 2 to 3 Central Time in the afternoon, right up until the closing bell. Talk through a bunch of ideas. We've still continued to have good performance there using the AI generated signals, technical signals, and earnings focused signals, which won't be present necessarily this week, but the following week we do start to get back into earnings season. If you do have other questions, you can always email us. I'm Keith at yellowtunnel.com. Vlad is Vlad at yellowtunnel.com. Or join us on that live trading room and ask your questions live so we can answer them as you're evaluating the markets. Thanks again, everyone, and looking forward to an interesting first full week for the new year. Thanks again.